Hi there. In this video, I want to talk to you about the key differences between a charity and a social enterprise. I'm also going to show you some similarities between them. So let's get started. My name is Boomy Tokan. Well, a charity and a social enterprise could be working to actually solve the same problems in the nation or in the location or in their chosen area. It could be they're solving social problems like health, unemployment, and poverty, or environmental issues like pollution, trees planting, biodiversity, climate change. They could be working to solve that. Both the charity and the social enterprise have the objective of making a social impact in their chosen area. So they have that in common. But then, once we leave the similarities, we now go into quite a few differences. Now, when you talk about a charity in the UK is registered with the Charity Commission. Now, it is a very long process to register with Charity Commission. It takes about 45 days for them to get back to you. At the time of recording this, sometimes they might even take a bit longer than that, but they will get back to you, and they're very proficient in what they do. But they're going to scrutinize your application. They're going to go through every minute detail of it, and they might come back with questions. But the point is, you register a charity with the Charity Commission in the UK, and I think it's probably the same thing in most countries around the world. Now, the officers of a charity, they are very different from the officers of a limited by guarantee or a community interest company, as we're going to come to in a moment, which are social enterprises. Now, when you hear the word trustee, and we ban this word about, sometimes we even use it for limited by guarantee companies, we say the trustees. Now, when it comes to trustees, they are the titles given to the officers that actually govern a charity. They need to they're given the trust to ensure that the charity is functioning in line with the objectives set out in its articles. The trustees have that trust. It is their responsibility. And if you go onto the Charity Commission website, you will find a long list of the roles and duties of a trustee. It's a very serious position to be in. So do it with advice. However, they are called trustees. Okay. The second difference between a charity and a social enterprise is that the charity's income sources tends to come mostly from grants. Now, I know charities do trade. However, the majority of their income does come from grants. That can change in the future, but at the time of recording this, almost 80 to 90% of most charities' income come from grant funding. In fact, when you set up a charity in the UK, you are more likely to receive grants than when you set up any other type of legal structure. In fact, I would go as far as saying that charities attract more money than any other legal structure that you can create. So that makes this point makes it very different from what a limited by guarantee or a community interest company, which are all types of social enterprise structures, do have, as you're going to see in a moment. The third thing about the charity is that the profits of the charity, even when they trade, for example, in the UK, we have Oxfam is a charity, and they also have shops. They trade online. You have British Heart Foundation. They also have shops and they trade online. And there's so many other ones. But the point I'm making is that even when they trade and they generate profits, all of it must be reinvested into the charity. In fact, charities come under immense scrutiny, more scrutiny than any other kind of social, well, don't say social enterprise, no, any other type of business structure. Charities are scrutinized, and I'm going to show you why. The why comes from this fourth point. So when it comes to your profits, you cannot take them out and share them as dividends to anyone. No, they've got to be reinvested. In fact, if you're a charity, you've got to declare when the wages you're paying any employee is over 60,000. You've got to declare it as part of your accounting report. Now, this final reason is one of the major benefits of having a charity. If you have a charity, you can attract what's called the gift aid. Now, the gift aid is a 25p in every pound that a taxpayer donates to your charity. So the HMRC would give you back. You have to claim for it, though. You have to register with the HMRC and then claim for it. But they would give you back 25p for every pound that any taxpayer gives or donates to your charity. This is one of the key reasons why most people set up charities, especially when they know that they're going to have donors who are taxpayers. Well, they want to collect that £1 and then they get another 25p back for every pound. That can amount to a lot of money. And it is the reason why charities are scrutinized more than any other type of business structure. I'm not saying that those are not scrutinized. I'm just saying that you are receiving money back from the Inland Revenue or the HMRC, and they want to make sure that you are using the funds to carry out the activities as it's written in your objectives or in your articles. So the other point allied to this is the fact that charities generally pay zero taxes. Charities don't pay tax, and they have a tax relief to all their operations. So for this reason, you find that charities are very different from the social enterprises. So let's go on and take a look at the social enterprise now, and then we'll begin to see the major differences. Now, when you talk about a social enterprise, now let me just clear this up. There is no business structure called social enterprise, okay? There's no legal business structure called social enterprise. So you cannot go to any of the registers or registration offices like the Companies House or even the Charity Commission and say, I want to set up something called a social enterprise. No, social enterprise is the manner in which people trade. Okay. Apart from that, you cannot set up. You can only set up business structures that would enable you to run a social enterprise. So let's get into that. There are two types of legal structures in the UK that can help you or gear you towards running what's called a social enterprise. I'm going to look at a little bit of that in a moment. Now, the first one is a limited by guarantee company. And the second is a community interest company. A limited by guarantee company is a business structure where you do not have shares. What you have is a guarantee to pay back a particular amount, usually £1, if anything should go wrong. All right. And the community interest company is a type. Actually, there are 7 types of community interest companies, but the 2 major ones are community interest companies limited by guarantee, very similar to the limited by guarantee companies, and community interest companies limited by shares. All right, those are the 2 types of CICs. Now, these 2 CICs will enable you to run a social enterprise. And what is a social enterprise? Well, a social enterprise is an organization that has in mind a social purpose as well as making profits. So the social part of it, social enterprise, social, is delivering a social objective or set up for a social purpose. The enterprise way is where you are actually pursuing the same types of agenda as a normal business would, because you're selling your products because you want to make money. But also, I call it doing good and doing well. So doing good, doing the social aspects of your business, and also doing well. So you could actually be running a social enterprise that deals with helping the unemployed to get back to work. And on the other side, you are selling your services to organizations that will actually pay you to deliver a similar service to them. So you are working in the social arena, and also you're working in the enterprise arena. So let's get into it a little bit more. What are the differences? Yeah, well, with a charity, in a social enterprise, whether it's a limited by guarantee or a community interest company, both of them do have directors, and the limited by guarantee has members. So the liability is limited to what they guarantee. Like I said, usually £1. But remember what I said earlier, that a community interest company could be a community interest company limited by shares. So in that case, they would have shareholders or investors. And we're going to come to that in a moment. So for the charity, it's trustees. For the limited by guarantees and the community interest companies, is directors. The second thing in relation to income sources, well, if you set up a limited by guarantee company, you can attract grants, but not in nowhere the same level to what a charity can attract. But you can receive grant funding, and we do help people set up the limited by guarantees and also community interest companies limited liabilities. I've got to say that because if you set up a community interest company limited by shares, that could reduce the amount of grants you could get, because some grant funders would say, oh, if you're a community interest company, you can apply, but you must be a community interest company limited liability. They don't want you to be a community interest company limited by shares for you to have access to their grants. So some grant funders do that. However, the key difference is that a limited, I beg your pardon, the key difference is that a social enterprise does trade. In fact, according to one of the definitions, there's no agreed definition of what a social enterprise is, by the way, but like I said to you earlier on, it's a organization that is pursuing a social purpose as well as an enterprise purpose. Or you can look at it as an organization that is pursuing a triple bottom line, which is people, planet, and profit. But the point I'm making here is that social enterprises are assumed to be organizations that at least receive roughly around 50% of their income from trading. So if you're a social enterprise, one of the features that you should be working towards is receiving income from trading. If you're not planning to trade, you cannot be a legitimate or a true social enterprise in the eyes of people, because where's the enterprise part? You know, the social part, you can receive grant funding to deliver it, but what about the enterprise? So if you're a social enterprise, you're going to be trading. There's grant funding, there's also trading income attached to your income sources as well, which is very different from a charity. A charity doesn't have to trade as long as they can get grant funding, but social enterprises do trade. It's part of what makes them a social enterprise. Okay, the third difference in the area of profits. What do you do with the profits? Like I said earlier, the charity has to reinvest all their profits back into the charity. But the limited by guarantee company also has to reinvest that money because they cannot pay out any dividends because there are no shareholders. Okay? The community interest company limited liability has to also reinvest back into the company all their profits. Of course, they can pay themselves salaries. It used to be, actually, that charities were not able to pay the founder, but that's changed now. And some of the founders, as long as you complete the forms when you register with the Charity Commission, or at some point later on, you can update your forms or your articles, then you as a founder of a charity can be paid. But for a limited by guarantee company, you definitely can draw a salary. And from a CIC, as a director on a in a CIC, you definitely can draw a salary. However, if you are a director from or an organization like a limited by guarantee has to reinvest the money back into the business. In that way, they pay less taxes. They're not exempt from taxes. That's another thing. Okay, we're going to come to that in a moment. They're not exempt from taxes, but they pay less taxes when they reinvest the profit back into the organization. Now, notice what I've said in this point 3 about profits. I said reinvested limited liability companies or limited liability CICs. However, if you're a community interest company limited by shares, you are allowed by law to share out 35% of your profits as dividends to the shareholders. So let me say that again. If you're a community interest company, you can share 35% of the profits of the business to shareholders and reinvest 65%. And point 4 will explain why that clause is there for you. Okay, so the first difference is that the charities officers are called trustees. The limited by guarantee and community interest company officers are called directors and members. And the income sources for charities are generally grant funding, but income sources for social enterprises are grant funding as well as trading income. Profits for charities have to be reinvested back into the charity. And if you're a limited by guarantee company, yes, the profits have to be reinvested. Limited liability CICs, the profits have to be reinvested. But if you are a community interest company limited by shares, then a portion of your profits can be paid out as dividends. That's about 35% at the time of recording this. Okay, the fourth point, the fourth key point that makes a huge difference, what's the major benefit, is that a social enterprise can attract investment. That is why they've allowed the community interest company limited by shares to actually pay out 35% of their profits as dividends to shareholders. Because the thought behind this, the regulators of the community interest companies thought about this and they said, well, we still want community interest companies to attract investment. And generally speaking, when you want an investor is going to invest in your organization because they're hoping to get some money. So if they're not going to get any money, if the law restricts them from getting any money back, they are unlikely to want to invest. So they come up with the idea that, all right, we'll let you invest and you can have 35% of the profits of the CIC, but 65% has to be reinvested. For that reason, social enterprises do, or somebody wants to run a social enterprise may, and is going to get investment, may look towards a community interest company in order to help them run their organization. Okay? However, a community interest company or limited liability company does not get any gift aid. So there's no chance of a gift aid, and community interest companies and limited by guarantee companies do pay taxes. All right. So those are the major differences. It's been very fast, but those are the major differences between a charity and a social enterprise. All right. Thank you so much for watching this video. If you look in the description box below, you'll find my details there. If you need any more assistance with either setting up a charity or setting up a community interest company or setting up a limited by guarantee company, do contact us and we'll be able to help you. Thank you so much for watching this video. Get in touch, stay in touch. Share this video, like it, subscribe to the channel, and I hope to see you soon. Thank you so much, and God bless.